the very first thing is to say, let's find out what we're dealing with. So what I do is I have a lot of people go onto a secure online site and they fill out basically a loan application information, and inside that gives me permission to pull their credit, and I pull their credit, and then I know exactly what I'm dealing with. I know what their debts are. I know what they've claimed for income. So what you probably want to do is look at the difference between a pre-qualification and a pre-approval. And so there's a process, and just ask your lender if they do this, where they will not only run the credit, but they'll say, give me your income statements, give me your W-2s, give me your bank statements, and then with that, they will actually send it to the underwriter. Now, what I do is, and a lot of people do, so it's just not, you run DU, desktop underwriting. So, and then if I get an approved eligible, if I get an approved loan, then I know I'm partway down that road of that approval. But if you have, and that's a good question for you to ask. Is this buyer pre-approved? Yes. Did you run desktop underwriting? What's that? There's a clue for you that they don't know. But if they've ran desktop underwriting, that's one more closer bet. One more closer bet to it. And then the best thing is to send the buyer in ahead of time and actually have the underwriter pre-approve that buyer. I mean, looking at the tax returns, looking at the bank statement. This is what happens. It goes like this. We need your most recent bank statement. Yeah, I'm busy, I'll get it to you. We need your most recent bank statement. Yeah, I'll get it to you. I need your bank statement. Okay, here it is. Okay, we're submitting it to underwriting right now because this is the last thing we needed. Submit it to underwriting. Underwriting's looking at it. Yes, you do have the $12,000 in the account. Where in the, French word, hell did this $10,000 come from? This deposit. Well, what do you mean? Where did the $10,000 come from? Well, it was a gift from my uncle. Cool. All right. Now we need to verify uncle's bank account. We need a letter from the uncle that it's a gift letter, and we need to make sure that the loan program that you're qualifying for adheres to that. Oh, it's FHA? Gift letter? All good. Fine. Family member? Got it. It's good. But so what would happen in the outside world looking in? That's a delay. What in the heck's going on? Blah, blah, blah. They will refresh your credit right before closing anyway. We need to warn the buyers, and that's why you do a good job of telling the buyer you don't buy anything. You don't buy anything. I had an agent do such a good job of that where the people said, well, we want to buy a new car, we want to get rid of this one car, and the agent said, no, you can't. Well, the problem was they wanted to lower their payment, and that helped them. So when I finally understood that all they wanted to do was to replace a car and actually lower their monthly payment, then that was fine. But every inquiry has to be explained on that credit. All right. So just, I wanted to explain that lock process because I didn't know if you had been through that. And then we went down the rabbit hole a little bit more. And by the way, all the word is on the street. The Fed is going to leave the rates alone until 2013, 2014. So right now it's kind of like we're still in a very fragile place economically. So there's no current indicators that rates will spike. Okay, that doesn't mean they might not go up a quarter or go down a quarter, but for the most part, they appear to be behaving themselves. So under the summary for your loan terms, interest rate, initial monthly payment for principal and interest. Can your interest rate rise? Yes or no? Even if you make payments on time, can your loan balance rise? Yes or no? Because these are some of these negative amortization type products. So these were very clear questions that needed to come forward so buyers understood that. But what happens is because let's put this in perspective. This document is part of this document. over 50 pages. And the buyer's signing every one of these. And so they're looking at this, and we might be seeing it right now. But I can trust you, maybe they're not. Maybe they're overwhelmed. First of all, you're speaking a weird language. APR, Alta, Fannie, Freddie. Who are these people? So that's the problem.
Are they signing that when they apply for the loan, or you mean at the end?
No, apply for the loan.
Up front.
Yeah. And actually, I'll give you a little tour just for giggles. It's hilarious. All right. So, but you see, these are really good points, but there should be maybe some more care that's taken with the good faith estimate. I love it. Do you have a prepayment penalty? Yes or no? You need to know. If I sell this house at any time, can I do it? Is there a balloon payment? And you know that there are two types of prepayment penalties, what they call hard and what they call soft prepayment penalty. A hard prepayment penalty is if you sell or you refinance, we get blank. That's called a hard. A soft is if you refi, okay, you can is that right, or is it sell? Yeah, yeah. If you refi, it's soft, but if you sell, then it's hard. So in other words, sometimes if you refi, the idea is that maybe that lender wants to get that loan again.